Hello everyone, welcome back to the Maverick channel, and on this channel I talk about crypto content that's hopefully helpful to me, and if it's helpful to me then hopefully it's helpful to you, because my channel is still small, so I need to keep it authentic. But even if it were to become bigger, obviously I would keep it that way, because you only talk about the things you do every day. So for those that are here, for those that are new to this channel, please don't forget to hit that like and subscribe button, because we talk about real world use cases of digital currencies, and we like to talk about the trend in the crypto space to see where things are going. So for example, when you look at things like Ethereum and its scaling solutions, we like to expand onto that and look at different layer 2 scaling solutions like Polygon, Optimism, there's Immutable X. I actually haven't prepared in this video, but I want to kind of introduce a couple of things. It's kind of a beginner video when it comes to DEXes, centralized exchanges. Only I'm going to focus on those two to kind of explain their importance when it comes to liquidity and the future of crypto and how this can be sourced. Okay, so those that are new to crypto, these are digital assets that are valued under market capitalization, and you can go to websites like CoinMarketCap, like another popular one is CoinGecko. Let me try and open it up. I think I closed it. So CoinGecko is another place that's really popular on the internet to search almost everything crypto. But we know that this space expands beyond what we see here. You can't just go with what you see here. For example, CoinMarketCap is amazing, but there's a lot of features as well, but it doesn't list all the tokens out there. These projects like EOS, old projects, I still have so many tokens listed under them, and you may not find them here. And then sites like CoinGecko actually do go an extra step to find out extra projects that may not be listed on CoinMarketCap, and these things you can do beyond just this place. For example, if you go to a website for a particular cryptocurrency, you can find out things we call contract addresses. So if this cryptocurrency is compatible with, say, the Ethereum virtual machine, it means you can use it in the Web3 wallet known as MetaMask. You can actually import these particular digital currencies. I'll give you an example. If you look at MetaMask, I'll try to open it here, but I don't think you can see it because my screen is protecting this and I forgot to turn it on. But if you go to, say, let's choose a currency like Matic for the Polygon network. This is a layer 2 scaling solution for Ethereum, but I'm just using it as an example. So you can find this feature on CoinMarketCap as well, but CoinGecko as well. So if you come to such a cryptocurrency, you can see right here, this is what we refer to as a contract address. So if you copy this address, this is not an instructional video on how to use MetaMask or decentralized exchanges, but rather introducing to you some of these things that you might not know about. You can copy this contract address, go to your MetaMask, go to import or insert a new token, post this there, and you'll have it appear there. Or you can even click on this drop down menu. These platforms like CoinGecko, CoinMarketCap, they make it really easy. If you want to add a version of this token on the Binance Smart Chain, you can copy this contract address. Remember, there may be fakes out there because anyone can manufacture their own token and claim that it's Binance Smart Chain or that it's Polygon Matic or that it's this. So you have to go to these sites. They make it really easy, or to the original website of that token and acquire the contract address. So here you can copy this contract address, follow the same process. If you've added the Binance Smart Chain on your MetaMask, you can add this contract address and you can use your Matic tokens on the Binance Smart Chain. You can do the same. You can add Polygon network itself, because it's also Ethereum virtual machine compatible, onto CoinMarketCap. You come here, copy the contract address, go import a token, add it there. If you're working on the Binance Smart Chain, actually, you can post this contract address there and this token will appear. So depending on the chain that you're using, if you're using the Polygon chain, this is the contract address for the Matic token. If you're using the Binance Smart Chain, this is the contract address for the Binance Smart Chain. If you're using Harmony, this is the contract address for Harmony. If you're using Moonriver, you can see CoinGecko actually has more. There's things like Moonriver, I've never even heard of this. There's something called Sora. So some of you may be familiar with some of these other chains that are Ethereum virtual machine compatible. I'm not familiar with everything. Okay, so that's just something you might want to know about, and you can do this with all other tokens. Find out which chains they're compatible with. Now, a quick review of the market. MicroStrategy purchases 1,914 Bitcoin and now holds almost 16 billion in crypto. This was just sort of to break the ice. Apparently, from the time they bought, I mean, I'm reading this article sort of to break the ice here, but we'll go back to the exchanges. But apparently, they've made like 2 billion so far. I don't think they plan to sell their long-term holding, so it's just to throw it in there, guys. And okay, let's get back to this. Another thing I want to talk about was in Decentraland. I've talked about Decentraland a lot. This is sort of the metaverse. When you hear people talk about NFTs, virtual machines, so there's play to earn games that within Decentraland itself. I participate in some of them. I'll give you a clue. There's one called Wonder Zone. So this is something you can do. You can mine for free. They give 100 tokens every day. You can mine. You can go to their website, Wonder Zone. You can find out more details. They even have a link to where their location is. It's actually here, -2959. You can click on this link and you can visit in Decentraland itself. So you can get in here. You click on these rocks. You can mine these resources. You can see here, for example, these are diamonds. This is, I think, platinum. This is rubies. I don't remember all the names. And then you can use those to craft these wearables, and they can use that to craft even other wearables that you can dress into, and you can sell them on the open market. So that's an example of a play to earn game that it's actually existing. So you can use those resources to mine such kinds of NFTs, and you can actually sell them on the open market. It takes a while to mine. It's competitive, but it's something you can do freely. You know, you don't need to spend any money. So that's one way of getting into crypto. So now let's go into exchanges. Now, to participate in all that, do NFTs, do that. Participate in all kinds of different layers that are different layers of blockchains. You need to have liquidity. For example, you want to buy tokens, there needs to be someone willing to sell them. You want to sell your tokens, you need to have someone willing to buy them. If you have $2 million worth of a token, you want to make sure there's someone willing to buy $2 million worth of that token. And that's what I mean by liquidity. And that brings me to the importance of exchanges. There are different types of exchanges. I'm not going to cover all of them. I'm going to just look at the main types of exchanges. We have a centralized exchange. We have a decentralized exchange. I'll give Binance Smart Chain because it's the biggest. There's Coinbase and everything, but that's more focused to the US, European markets. Binance Smart Chain is kind of global, covers the whole, they go out there. They're rich in there. So Binance Smart Chain, they have a decentralized exchange, but I won't focus on that. I'll focus on the mainstream ones. Binance Smart Chain is an example of a centralized exchange. So you can go find out more how to use this exchange. But what I want to explain is, you can see right here on the side, we have this graph here, which generally shows you the prices, the current price of the digital assets, maybe the previous highest price. And to know how to read this chart, guys, go do more research. But this is simplistic. These are candles. These are candle charts that show you maybe the maximum price and the current lowest price here. And this in red here shows you the current price of the digital asset. Here I'm comparing Bitcoin with USD Tether. So the prices are in US dollar Tether, and then it shows you the lowest price, which was 42,620. I didn't know it actually dropped that low, but that was for a short time. And this in red shows you the current price of the crypto. The prices you're seeing here on the red, these ones that are in the red, because here we're looking at a Bitcoin. You can see a BTC/BUSD. It's actually with BUSD, which is a stable coin for the Binance Smart Chain. You can these prices in red, because with BTC/BUSD, these are the people selling their Bitcoin. So normally that's represented in the red color. And in green, these ones below, these are the ones buying Bitcoin. So these prices you're seeing down here, this person is selling Bitcoin at the lowest price, the lowest price you get for Bitcoin. When the higher you go up on the list, these are the highest prices. So you always want to click on the lowest price, but also depends on how much Bitcoin you're buying, because the person selling the lowest price could be offering way less than you're willing to buy. So you can go for someone with a higher price that's selling more tokens. And consequently, here below, this person at the top is willing to buy, these guys are selling. So this person at below is willing to buy the tokens at the lowest offer. So if I clicked on this guy right here and put in a buy order, if it wasn't filled, my price would be listed here because I'm willing to buy at the lowest price possible. So if you're selling, at the lowest price possible will be going down. So if you want to, this person's willing to buy at the current market price. So normally the market price is determined, I guess, by average between the person willing to sell at the lowest price in red and the person willing to buy closest to that person selling at the lowest price. And then we'll get an average, and this will be the current price. So what you can see here, the price is here. You can set an amount that you're willing to buy, and you can you can basically increase this depending on how much, for example, BUSD you have. You can increase this. Maybe I want to sell 50% of my BUSD. You can click on whichever price offer that you think is the best. Click on buy, and it will be registered to the other side. You buy your Bitcoin. So this is a spot trading account, and this is an example of a centralized exchange. You have real people putting their real Bitcoin here and willing to sell it. Okay, now when it comes to decentralized exchange, the biggest decentralized exchange on Ethereum was Uniswap, because it innovated the way we see centralized exchanges. Now, instead of having people listing their tokens like this, whatever they are selling, you have something called an automated market maker, and you have things called pools. For example, in Uniswap, you can add a pool. For example, I'm not connecting my wallets right now, but you can do that later. Maybe you can demonstrate with the Binance Smart Chain. Then also, Binance Smart Chain is another type. PancakeSwap is the biggest decentralized exchange on the Binance Smart Chain. So I'm going to use this to explain, because it's the one connected to the Binance Smart Chain wallet. So, for example, and it has more stuff. And basically, understand one exchange, you can understand all the others, because they employ a similar kind of a thing. But PancakeSwap has it has a lot more going on. So I think I might use this let me just use this to explain. When you come to a site like PancakeSwap, and similarly to other DEXs as well, you just need to understand the user interface. You can see trade here. So unlike the centralized exchange, you can come here, trade. This is spot trading. It means you trade at the current prices. You buy and sell at the current prices. When it comes here, you can, for example, they have trade here, so you can go to an exchange, okay? And within this exchange, you can see BNB/cake. So with the other one, it's a BTC/BUSD. So people are listing their prices. Here, it's a BNB/ the cake, which is the token of PancakeSwap, and BNB, which is the Binance Smart Chain token. This is a pool containing both the Binance Smart Chain token and the cake token. So you have like a pool. Think of it like a swimming pool. So in there you have half and half split of the Binance token and the cake token. So if you want to trade, you can say, for example, you can come here, and you remember the contract addresses I mentioned before. Sometimes you might come here and you don't find your token listed here. So you can come to a platform like CoinGecko, attain the contract address, come back to your decentralized exchange, paste it in there. Let's give an example. Let's try to copy the Binance Smart Chain contract address right here. Copy it in here. Let me delete this. Okay. Now you can see we have Matic that has actually popped up. Now I can actually trade Matic. Right now it wasn't being listed. Make sure you copy the true contract address. Go to their website or to a site like CoinGecko or CoinMarketCap, and you can click import, and it warns you, unknown source. Anyone can create the BEP20. This is Binance version tokens, like the Ethereum ERC20 tokens. This is the version on the Binance Smart Chain. So BEP20 token on Binance Smart Chain with any name, including creating fake versions of existing tokens and tokens that claim to represent projects that do not have a token. If you purchase an arbitrary token, you may be unable to sell it back. So make sure it's the right contract address, import it, and now you can see Matic has appeared. So if someone out there created a pool of both Cake and Matic, you can now trade. And because there's a lot of people participating, definitely someone has created it. So you can click this arrow to just switch the direction. So I can say I want to buy Matic on the Binance Smart Chain. If I have BNB, which is the token, I can just type right now on this account, maybe there's 0.06 BNB, and it will calculate and say that this will trade you for 12.59 Matic. You can click swap, and it goes into the pool. You can confirm your swap. I'm not going to, but I can just show you. Then you sign the transaction. Your MetaMask Web3 wallet is going to open up. I don't think you can see it here. I don't know if it's recording it. Then you can click confirm, and this can get confirmed. Okay, let me do it for the sake of this video. So I've clicked confirm on MetaMask, and you can see transaction submitted. View your Binance Smart Chain. You can click view your Binance Smart Chain to see what is happening on the actual blockchain. So you can see the transaction hash. A transaction hash is basically, there's this hashing algorithm called a 256 hash algorithm. So the transaction hash is the signature that points to that transaction. If anyone that has this hash can look at your particular specific transaction for what you did for that particular thing, and this hash will be generated even if you're trading NFTs and all those kinds of things. So if I can close here, you can see now it's showing me that I have a balance of 12.5 Matic tokens. So all I've done is to go into that pool, insert the BNB tokens in there. Now that pool has more BNB tokens, and I've extracted the Matic tokens that were there. And this pool, different people put their tokens in there. But this automated market maker, what it does is it looks into this pool, uses this equation where like, okay, I've put in the BNB tokens and I'll put up Matic tokens. So the pool maintains that level because I've replaced one for the other. So it's all automated. There's no actual market makers or people placing their prices. So that is the main difference between a centralized exchange like Coinbase or Binance Smart Chain or others like Crypto.com and so on, and something like a decentralized exchange. Okay, now you can also go to something called Liquidity. You can add your own liquidity for any, you can create your own tokens and add liquidity. So you can, or you can select pre-existing currencies. You can say, I want to add liquidity for the Binance Smart Chain and the, say, the Matic token. Okay, and if you have, the liquidity splits half in half. For example, if I have $2,000, I want to have $1,000 of the Binance Smart Chain token and $1,000 of the Matic token. So when I insert liquidity into the pool, for example, if I click maximum, I want to insert 12.59 Matic tokens. Okay, and if I similarly have an equal amount of Binance Smart Chain, that's right now it's saying, okay, we can try clicking maximum because the BNB tokens are the least, because it wants you to split it 2 and 2. So if you have $1,000 of BNB, it has to be $1,000 of the Matic token. Okay, so right now it's trying to calculate. Maybe because the BNB is so little right now. But usually if I had like 1 BNB, I click 1 BNB, and if I had $500, if the price of the Binance token is $500, then it will have that 1 BNB token, which is $500, and Matic tokens worth $500. I insert those tokens into the pool and I've provided liquidity. It's always half in half for the two tokens. Now, there are also other types of pools that have multiple liquidity, so you can insert more than one token. So there's other features here like farming, liquid farming. So those tokens that you have, you can actually do something called liquid farming. Okay, you can deposit these tokens and in return you get rewarded by other tokens that have been created. So depending on what the pool is offering. Okay, so let's first click here. You can see here, if you offer a cake and BNB liquidity into their pool, so what I just explained to you, deposit those two tokens, the half in half, you're going to get a 41.42% annual percentage return. So if you leave this here over a year, you should be getting this return. Sometimes this is calculated in annual percentage yield, so this is a compounded yield kind of thing. But if it's not that, then you will get this annual percentage return. So you can get tremendously high types of returns, because also the risk is there. There's something called impermanent loss, but you may have to Google that, where if the price of one token increases so much, then a bit of that token is taken off by the automated market maker and replaced with the other one to maintain that one-to-one level. And the price of one token goes down so low, a bit of your other token that's still higher has to be taken off and replaced to this one to make it a level one-to-one field. So you can face something called impermanent loss when that happens. So that's why you see these kinds of rewards, 41%. So if someone came and put in, let's say, $2 million worth of value in here, they've provided $2 million worth of liquidity. So if someone out there wanted to buy $500,000 worth of tokens, it's very easy because you've provided that liquidity. Now, for taking that risk, for potentially facing something called impermanent loss, you're rewarded with a hefty, with a huge APR, annual percentage return of 41%. So with things like stable coins, if you say provide liquidity for a stable coin, a stable currency that doesn't fluctuate a lot, then the APR reduces. So these are all different tokens, and these are pairs of liquidity pools. Now, there's something called a pool as well. So these are farming. So you get rewarded in those tokens. And these multipliers you're seeing here, basically every pool, okay, the multiplier represents the proportion of cake, which is the native token of the PancakeSwap DEX or decentralized exchange. So rewards each farm receives as a proportion of the cake produced each block. So for example, if a 1x farm received 1 cake per block, a 40x farm would receive 40 cake per block. So all the people providing liquidity, for example, in this cake/BNB pool, they're receiving 40 cake tokens, not each, but rather split equally. So depending on if you have 1% of the whole pool, you're going to get 1% of the reward of the tokens. So that's how it's calculated. Now there's something called a pool as well. So that's yield farming. So there's also things called pools. Okay, now in pools is where you can actually find one-sided tokens. Okay, so you can, for example, there's a cake pool here, which is auto-compounded, and you can see its yield is 67.5%, which is an annual percentage yield. So this is compounding, and if you left these things for 1 year, that would be the type of percentage. This total staked is basically the total amount of tokens in the pool right now. So obviously you want this value to be much higher, because it also adds to the authenticity of this pool. So you can check out more details. If you've staked, you can check out more details of what you've staked, how much you've earned over that staking period, and so on. So the difference in a farm, you're adding 2 tokens and then you're getting rewarded by another token. So you're being incentivized by being rewarded in that other token. And for a pool, you can deposit just 1 token. So you can see you can just import the cake token, or you can you can stake cake and earn whoop, whatever this is. You can stake cake and earn high. There's a token called high, or these are all other kinds of tokens. So that is pretty much it in terms of pool. You can just provide 1 token, so you don't face any impermanent loss, but you're providing a very important role of providing liquidity. So liquidity is highly important, and that's why I think these decentralized exchanges and some big centralized exchanges will be extremely important as sources of liquidity for financial institutions, for high net worth individuals, for low net worth individuals, for anyone that wants to sort of carry out any kind of transactions in these markets. They're going to be extremely important in the use case of providing liquidity for people that need it, for all kinds of activities, for lending and borrowing. I'll actually show you, there's some platforms. I'll give you an example. I didn't want to, just as an example, for example, there's this platform. If you can see, these you can provide liquidity. They split it up so well. You can provide liquidity for other kind of cryptocurrencies that are interoperable on the Binance Smart Chain, and there's others. But I'll just go to the lending part of their protocol. Now, for example, if you see the lending part of their protocol, you can provide liquidity in this platform and borrow against the assets that you've provided liquidity for. So for example, you can deposit BTC because it's interoperable on the Binance Smart Chain, or BNB, or Aqua, or Ethereum, or Tether, or Gamma, and so on. And you can borrow against that collateral that you've provided. So you can even recycle your borrowed money and invest more in the platform. But this is not investment advice. I'm just trying to show you the importance of liquidity and how expansive, how much can be built upon these platforms if this exists. So the point here today is these decentralized exchanges and centralized exchanges are going to serve a very fundamental role as we move forward in this crypto space. Guys, this wasn't exactly a how you do this video, what is this how do you do this, how you pick and choose to do what, but it's sort of a video to show you what is going on with liquidity mining, with pools, and with the importance of, you know, how the difference between centralized exchanges and decentralized exchanges in terms of real use cases. Of course, these other features in terms of derivatives, for example, decentralized exchanges, these are extra features, but fundamentally the point, the idea of these exchanges is being able to trade one asset with another. All these other features are extra features to make our lives easier and to make the adoption of crypto more and more real, and to get it more realized as it garners more adoption. Alright guys, I hope you learned something in this video. A bit of a lengthy video, a bit of things to explain. I didn't actually practice this before because I wanted it to be as natural as possible. In case I met any pitfalls, I would be able to correct them as I make this video. Otherwise, hope you enjoyed anything. Enjoy the start of your week, and I'll see you on the next one. Cheers guys. Bye bye.